remember this fish tank in here, some of you hawk eyes might recognize something different in here. So what's going on in here? So have you realized something is wrong here? So remember this guy? So there you go. There's a little shock in there. Like, what the hell is that guy doing in here? So, and that's the so-called market makers. And they are also involved in the whole thing, which makes life not even easier for these so-called retail traders. Because again, these market makers are literally the big banks, like the brokers, all these people who kind of having their strings in the market as well. And their main objective is to make as much money as possible. They are fine with manipulating price for their own benefit and target liquidity to make money themselves. That's literally banks that are not afraid to getting sued billions sometimes just to make money out of the whole system, because they understand like that market is delivered by liquidity and they use that as their advantage. And that's how they market making price sometimes as well. How do they do it though? So first we start with the big banks. How does big banks do it? So first you see like a few articles where they're getting fined like whatever billions for rigging the forex market and stuff like that. But let's first dig into that. So how does banks actually trade? There are only a few banks which have the so-called buying power to put so much liquidity into the market to actually push the market around if they wanted to. So first of all, you have to understand that not every bank can do that by any means. There's only a very few amount of banks that actually have the buying power to put so much liquidity into it that they actually can make a little bit of a push in the market, right? So usually they're using a specific way as they chasing each other. They see the market in a very different way as us, because for them, they are very, very inflexible. If you think about yourself, you can trade whatever, whenever the fuck you want. For them, they don't have this luxury. They need to actually monitor all the price. It needs to have key zones where they can put their huge positions in, right? And they need to wait for the ideal entry area by entering their positions and to create these big wicks from time to time. And that's what creates sometimes so-called stop hunts of people, which always is not meant to stop you out whatsoever. That's just big institutions having now their huge liquidity fill, and they can enter it, and that sometimes creates these little stop hunts or whatever, these huge wicks in the market. That's really what happens in there. So we can identify these areas and wait for their so-called whatever stop hunts, and then trade in light of that, because that signals us that now a huge institution entered the market, right? But guess what? They also can take advantage of the fact that Enigma delivers the price but to high liquidity areas by placing so-called ghost orders. What is ghost orders? So pretty much that is orders in the market, and it's huge limit orders. And as Enigma seeks liquidity orders and is gravitating towards those limit orders before price actually gets the limit orders triggered, they delete them, and price is forced to move rapidly in the different direction. And that creates these huge wicks also. You've probably seen like a lot of times already, right? It's called spoofing. And spoofing, by the way, is illegal. They still do it. And you can see them getting fined like left and right by that. Now, how does it look like in the charts? So if you look, for example, in this area, so what is going on here? Right, so what do we see? We see like price obviously making a false low in here, building the false channel all the way down there, obviously then moving higher, 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 building all this buy trend, buy trend, buy trend, giving this false channel whatsoever. Finally, getting like to a reversal area. Obviously, you will know later why they're doing that or how they're doing it and how you can identify it more easily. But first, let's see how they spoof the market actually, because technically the market, with our understanding of lit, this zone would actually be valid for reversal now, okay? But what can banks do in scenarios like this? For some reason, they are not filled yet or need to grab more liquidity for their purpose. How do they do it? They need to grab obviously the liquidity which lies above this area. Of course, they cannot push the market up themselves, so that's why they need to come together and place huge limit orders inside here. Can be stop orders, can be limit orders, doesn't matter. They need to put huge orders inside this area, and as Enigma is gravitating towards this huge liquidity above here, right, what does need to happen? Price needs to gravitate towards that orders. The moment they're breaking this structure though, to grab out all the liquidity, the limit orders is here, they press one button and exit and cancel all the limit orders. So there is no limit orders anymore. So Enigma is forced to make this. Immediately smokes lower. And that's why they sometimes can spoof these little areas in here, and then price is rapidly forced to push lower. And you probably saw examples of this a lot. They're really annoying because there's not really trading opportunities in here, because you can see they're not really giving you any possible trade opportunities after that. They spoof the price higher, grab all the possible liquidity, then there is no liquidity, and then they smoke price lower and never give you a proper re-entry, and not even like pullbacks where you could re-enter afterwards. And that's how banks actually manipulating it and getting even sued for that. But they don't care, they do it all over the place. Just to show you a little bit one examples. And then there's brokers. Okay, and brokers doesn't make life hard for you as well. And they have a little bit tricks as well. Usually by brokers, nowadays they're getting more actually, let's call them fair. But there's also, of course, like it's always like a few black sheeps around there. And you should only, and you need to stay away from these so-called B-book brokers. B-book brokers are literally brokers that offers you like a huge leverage, like even some incentives is you pay in like whatever, pay in 1K now, whatever you get like whatever 500 extra and shit like that. They lure you in like with whatever incentives and this huge leverage and nonsense like that. And they just taking, because they know the numbers as well, and they taking the other side of your position. So if you're taking a buy, they're taking the sell, right? So if you lose money, they make money. But that's B-book brokers. So what can they do, right? So they literally can have a lot of tricks. And that happens, by the way, to a lot of your mentors in Lit as well, like back in the days, because they can freeze your price feed or just disconnect you a block and reconnect it. For example, you are entering a trade and have not placed a stop loss yet, whatever. They can just freeze your fee. And again, they can mess around with you a little bit. And they just make sure that you're getting whatever slipped or whatever. They can widen your spread, create your stops. They can also create ghost wicks. That's really annoying. Ghost wicks are literally whatever price usually is made like this. And your stop loss was above here. They literally create a ghost wick. So grab your stop. And then you stopped out, and then for you there's a wick. But then if you refresh your chart, the wick is gone. Price never really went there. They just whatever essentially made the price to go there to grab your stop, just to order stop you out. That can happen as well. But usually, again, that's with these B-book brokers. Just so you know, they're having a lot of these tools. They used it like years and years ago, like almost like daily. Nowadays, it's getting a little bit harder because there's so many, obviously, authorities behind everything, and it's getting a little bit more fine in that sense, right? It's not that worse as it was like years ago. Okay, so just be careful with picking the right broker and stay completely away from this exotic nonsense, because that's usually B-book brokers and they actually can do that for you easily.